Fintech, securities and regulation. The financial services industry is pushing the envelope with regards to blockchain solutions, ETFs, and regulating an emerging digital financial infrastructure. Let's hear what the experts have to say. Kenneth Farrugia, BOV. Benjamin Gristi, KSI, Malta. John Matonis, Bitcoin Foundation. Jacek Czarnecki, Makerdao. Moderated by Beverly Tonna, Blockchain Advisory.
Morning.
Hello again, everyone. So we're joined here by three exceptional panelists, as you have heard from their introduction. We have a mix of expertise from the banking regulatory side, from tax and legal side, and we'll be speaking about the most interesting or hot topic on the market right now, STOs. So we've seen an advent from a large interest in ICOs last year, shifting onto STOs this year. Fintech, securities, and regulation are really what's on everyone's mind lately. So I'd like to start off by asking you all, how was Fintech defined over the last decade, and how is it changing now?
Shall I start?
Definitely.
Right. Good morning, everyone. I'm Kenneth Farrugia. I'm the Chief Officer responsible for the business of the group. I sit on the group's executive board. I'm responsible for general business services, investment, and asset servicing. I sit as well on the boards, on the company's asset management subsidiary and investment scheme of the group. I am also the chairman of the board of Finance Malta, which is the national promotional body for the financial services industry. Finance Malta organizes events like this, both in Malta. We have a big conference coming up on the 5th and 6th of June, which will deal, amongst others, with blockchain and other relevant topics. But we also organize a significant number of events outside our shores, in the US, in Europe, as well as in Asia. Well, from a banking point of view, Fintech is an interesting disruptor because we're seeing that the traditional banking domains, talking about the payment services space, looking at even lending, are being disrupted by Fintech operators that are entering the market. Clearly, banks, and I can even sort of relate to this at Bank of Valetta. So the banks which offer a plethora of services do not really focus on one particular area of business because they have, they are traditional universal banks and service quite a number of sectors. They are unable to give a dedicated focus to one particular sector. And this is where we're seeing disruptors in the payment space coming to the market with tech-driven solutions, very innovative solutions, and entering into the traditional domains of banks. I think banks have realized rather late. I think they have been very lethargic in investing in technology. And we're seeing significant technological investment ramping up in these areas, big banks acquiring fintech companies, teaming up with fintech operators, because I think together they can work better. I think the gap that exists today is two-pronged. I think there's a gap on the governance side insofar as fintech companies are concerned. The regulations binding banks are much more onerous, in my view. And then there's the element of trust. I think banks still earn the trust of their clients, but I think there is a nice symbiotic fit between fintechs and banks, and I see a bright future for both operators in this space.
Thank you. So speaking about token generation events and banks, ICOs, STOs, and the advent of such, Joe, what do you feel like? How can you give an input on this, since you've been in this space very often?
Yes, thank you. I'm John Matonis. I'm the co-founder of Globitex, which is a digital currency exchange, and I'm also the CEO of their licensed subsidiary called NextPay, which operates out of Lithuania. Lithuania is a jurisdiction that just recently licensed Google Pay and Revolut as well. So a lot of new developments coming out of Lithuania. But NextPay is also unique because we're able to generate our own IBANs. and the funds are not held by NextPay. The funds are held at the central bank. So I think that one of the changes we're going to start to see is the convergence of the people who are operating crypto exchanges will start to also cater more to the fiat banking account side as well, with having those facilities, so you're able to make third-party payments, and it's just as easy for commercial banks to approach it the other way and to get into the crypto trading side of the business. So we're going to start to see this convergence, either the banks coming into crypto or the crypto exchanges, the large global ones, broadening out. And we're just in the very, very early stages of that right now. So with respect to STOs, I think the panel topic is much broader than just STOs. But having been part of the ICO wave that we saw in 2017 and 2018, what I've noticed is that companies really have three primary ways to raise capital. You can either sell equity, you can sell debt, or you can offer a utility token, which is what we saw in 2017. The regulators are fine in understanding the first two, but when it comes to the third one, there was really no clear box to put a utility token in. So they were playing catch up for the entire 2 years. They still have never really caught up, and I don't think utility tokens are dead. I think that utility tokens will have a place in the future, but it'll be a much more refined place and a different place with a lot of other criteria that has to be met, rather than just throwing out a white paper. On the STO side, well, first let me talk about IEOs. IEOs are really ICOs that are just offered by the exchange. So you're seeing a lot of ICOs now turn into IEOs. STOs, which is security token offering, is really no different than what I mentioned in the first category with selling securities. So the problem that I see with STOs is that a lot of the proponents of STOs think that they're going to be having the same type of liquidity and mobility as ICO tokens. That's not really going to be true, because an STO is really just a tokenized variant of a real-world security in a certain jurisdiction. It comes with the same upfront regulations, the same investment that you would have to go through for a traditional offering. And probably, I think the biggest challenge for STOs is that once they're launched, they're only really valid for trading within the jurisdiction that they're approved in. So you don't have the cross-border nature that you would have with other tokens. And because of that, you end up lacking a lot of liquidity in the market. So they're very formative right now, but I think that they have significant challenges.
Okay. Any thoughts from the other panelists from your background? Do you see that this new regulation or rush to STOs or IEOs, as you rightly pointed out, is creating further confidence in the market? Is it creating further interest? Have the regulations that have been proposed by governments such as Malta and enacted brought more interest and more security from an investor point of view?
Yeah, hi, I'm Jacek. I'm a legal counsel at Makerdao, the creators of DAI, the stablecoin. So, like the largest potential I see in the space is not about any type of offerings, to be honest, but rather about building new types of financial infrastructure. This is something, this is truly new, because when you look at STOs, ICOs, no matter what kind of offerings, what you have is a central entity that is distributing something, right? And of course, the technology has changed. These are not paper certificates; these are tokens right now. But the main setup, the main scheme has not changed. What has changed is that how secondary markets look like. And here, of course, cryptocurrency exchanges that also quite traditional in terms that there is central entity operating a trading venue. But the advent of decentralized exchanges, for example, that's something that really changes the picture. And most of what we call decentralized exchanges are not decentralized at all, or at least partially decentralized. But there are a few that are truly decentralized, and they held this promise of radically changing the financial infrastructure as we know today. And in terms of the regulations, because that was part of your questions as well, like the whole legal institutional setup that we know today, it's like a response to the past technological landscape. And in that way, all of these regulations, they like petrify the past technology, past technology scene that we know. Now with this new technological development, we somehow need to find like a response to regulators and to lawmakers, because they are concerned about some universal values such as investor protection, financial stability, things like that. These are really universal values that apply no matter what kind of technology we are dealing with. But at the same time, we have these technological solutions that really solve many of these problems. And at the same time, at the rule level, at the level of particular regulations, they just meet huge obstacles. Like for example, on the blockchain, settlement is very trade equals settlement, right? If you're trading, settlements happens on chain. At least that's possible to do that. Regulations, on the other hand, they demand that you use specialized institutions such as central securities depositories for getting this settlement, this additional settlement layer. So they are catering for some important principles, yet the rules are not necessarily adjusted to the new technological reality. So in order to really free up this potential of blockchain, financial markets, and financial infrastructure, this is probably a long-term goal of changing the regulatory landscape.
Great. So Ben, operating within the Maltese regulatory landscape and taking into consideration what we just heard, how do you feel from a practical point of view that the regulation has assisted with facilitating these kind of transactions?
Yes, first and foremost, good morning. I'm Benjamin Gristi, a tax director at KSI Malta. My background is obviously more regulatory and tax oriented, but over the recent time I have sort of been involved in the fintech space, advising on a number of clients, mainly relocating to Malta. And yes, it's become a daily part of my job to advise foreigners, even Maltese people coming to Malta, and take advantage of the regulatory framework of Malta. Definitely the fintech space has evolved, luckily enough. Technology, the technology sector and the financial sector have found a very good way how they can combine to deliver enhanced financial products and solutions to the customers. And Malta has been in the forefront of trying to come up with the best possible regulatory framework for all the players involved. Some feedback that I get from our clients maybe is that some of our legal framework tends to be a bit onerous on their part, especially for startups wanting to venture into the ICO or its equivalent in terms of our law. So that is why sometimes you get the clients, as correctly stated, saying, if I'm going through all these onuses, I might as well consider an STO. And that is where maybe we've been pushing for a clearer legal framework locally in terms of STOs, but it's a fact that yes, demand seems to be shifting now towards the STOs. I fully agree, however, that the ICO market is not dead. There are certain things which cannot be achieved under an STO, but which are possible under the more traditional ICO. But again, in Malta, the vibe is that we're going there. So we're looking forward to have a clearer framework when it comes to STOs as well.
Thank you. So Kenneth, maybe you can give us a bit of an idea from a banking perspective. When linking the digital, like we're saying, all this new fintech ideas and regulation, it's difficult to keep up with all the AI developments, etc. From a banking point of view, because it seems to be something that we're experiencing even in practice. Why can't we open a bank account in the blockchain island? What kind of leeway do banks have to accept this technology and actually potentially onboard it?
Well, banks are like, playing the role of Dr. Jekyll and Mr. Hyde, and really they are actively involving themselves in the blockchain space, and we're seeing a number of banks, adopting this technology because it induces operational efficiency. But then when it comes to servicing virtual financial assets in particular, they're sitting on the fence. And I think there are a number of reasons underpinning that. First of all, the anonymity behind virtual financial asset ownership is a concern. And if we look at this within a European context, and if you look at the significant regulatory fines that, banks are being burdened with because of weaknesses on the AML front in terms of transactions in the fiat space, when they are now faced with operators coming forward with business models which involve the clearing and settlement of crypto assets, they are saying, I'm struggling with, putting my operations in shape for fiat-led transactions, and the absence of regulations at European level governing AML and KYC for virtual financial assets do not put me in a comfortable position to ensure that I have the appropriate processes and procedures in place governing that. Then secondly, I think the second concern is the hacking incidents that we've seen permeate this market over these last 5 to 7 years. They have been quite significant. And clearly banks, being the entities in the ecosystem with the deepest pockets, are the most likely ones to be litigated, right? So the banks are saying, for the third reason, which is reputation risks, I will not involve myself in servicing this sector. So on the one hand, they're adopting the technology, but on the other hand, they're not servicing businesses that are using this technology. And it's somewhat ironic, right? I think that within a European context, at European level, we need to really start pushing strongly the development of a European framework governing this particular segment. And I think what's missing from an industry point of view, because we're always criticizing regulators, is that there isn't a European body representing blockchain operators, representing virtual financial asset operators, that is interfacing with European regulators to really start pushing their feet on the pedal, right, and create a European framework to regulate this sector. I think banks want to participate in this arena, in this space, but the absence of a framework is leaving them on the fence. And this is, I think, the unfortunate state of play.
Yeah, I predict that banks are going to be getting involved in crypto and Bitcoin in a big way very soon. And we can see that just by the presence of a bank on the panel here.
I'm courageous, am I?
They're going to come to realize that it's silly to keep banking crypto companies and crypto exchanges when they can just as easily be a crypto company or crypto exchange. And the market is headed that way. So it's going to be very jurisdictional, though, and we're seeing that also with places like Malta and Gibraltar and Isle of Man and Switzerland. It will be very jurisdictional, just like the gaming was. In the gaming market, the larger jurisdictions left a lot on the table because they didn't want to participate. The other jurisdictions were able to make a name for themselves, be able to specialize and focus in that. And there's a lot of reward for the early movers in this space. Now, I disagree a little bit that we need everything to already come with a framework, but that is the current state of the banking world. And for the most part, the banks are, they're afraid of the U.S. money laundering fines and things like that. That's probably the big fear. But we will get past that, and you will start to see this convergence with massive rewards for the early adopters.
Yes, and I think the point is that, even if you look at in the clearing and settlement space where some of the banks are involved, it's literally very complex, it's fragmented, it's siloed, if you look at the middle and back office operations, it's highly inefficient and very costly for the banks. So inducing blockchain-based solutions, which will bring with them the clearing and settlement of crypto assets, would be a very highly welcome development for the banks. And we're seeing already interest in the space. Some are querying whether CSDs, to refer to earlier, will be disintermediated and will become irrelevant. And we're seeing CSDs, teaming up together, MOUs being created with the likes of Euroclear, to take forward and invest in this sector. So I think it's a journey, It's just that I feel that it needs to move at a faster pace than it has done so far, because the infrastructure is not yet in place to service this new breed of assets.
As John said, having you here is already a plus. So thank you all for being here. Thank you for your comments, and we look forward to discussing this matter further after the panel. Thank you.
Thank you.
Thank you. Thanks. Thank you. Thanks. Thank you.